Welcome back. OpenAI and Anthropic have commanded premium AI pricing, but is that advantage fading ahead of their public debuts? Our Kate Rooney has that story. Hey, Kate.
Hi, Leslie. So OpenAI and Anthropic have seen this eye-popping revenue growth during what has been just a spend-at-all-cost attitude in corporate America. Experts tell me that may be why these AI giants are both racing towards public markets to sell that AI growth, while these numbers still at this point look that good. So both have filed confidentially. Anthropic, when you look at the revenue, it was a $47 billion run rate. That was up 4x from last year. OpenAI's run rate, when you look at revenue, it's roughly doubled from a year ago. Analysts and investors I've been talking to tell me the growth rates for Anthropic and OpenAI are what they expect to be the fastest they're ever going to be. That is one good reason to go public now. The concern is that some of their largest enterprise customers are starting to rein in token spending and overall AI spend. And while that's expected to continue, folks are going to spend on AI. But one person told me what is absolutely hitting a peak, at least according to Darren Kimura. He's the CEO of AI Squared. He says the peak here is using the most expensive models for simpler tasks within organizations. As he put it, employees don't need these powerful models on the market to write emails. So the pressure, it's coming from all sides here. You have big tech as part of this. Venture capital analyst Harrison Rolfe over at PitchBook told me big tech is actually the biggest threat to OpenAI and Anthropic. He described it as the ability to, quote, stiff arm these companies on price. You got Microsoft, Google, Amazon, all offering cheaper models while also helping their enterprise clients route to some of the less expensive options out there. Executives I've been talking to over at Anthropic and OpenAI are very much aware of this pricing pressure. When you talk to them, they're thinking more about how to adjust to this current backdrop. I spoke to Diane Penn at Anthropic recently. She told me she is hearing about this price sensitivity from clients, and they are now focused more on ROI. They're trying to adjust here. The same thing from OpenAI executives. They are also sprinting after that enterprise customer as well. CEOs we have been talking to say they are increasingly switching to the cheaper models. The IPO window, guys, might be right now, and there is, from what we're hearing, a push to go public before this AI premium fades, and then they start to face even more of a squeeze on pricing. No comment from the companies, guys, on this story. Back to you.
Yeah, when they say the window is open, this is part of what they mean there. Kate, I'd love to get your thoughts on this news that Anthropic is accusing Alibaba of a campaign to brazenly and illicitly extract AI capabilities. Baba shares down about 4% today on some of these headlines.
Yeah, Leslie, so this was according to a confidential letter. We actually got a hold of this letter that was sent to lawmakers. It was Anthropic complaining that Alibaba had been essentially distilling one of their models and getting access to Claude, basically copying it and offering a cheaper version of it. So that's been an issue for a lot of these AI companies, that they are spending so much to have the best model. The risk here, it also plays into the IPO conversation, is that Alibaba allegedly, or others out there, could actually essentially copy it. They have really raised the flag to the administration. They're asking for more controls. They talked about export controls in that letter as being part of this, saying we do not want our competitors to have access to this, and also playing into the geopolitics conversation.
So you got the pricing problem, you got the Baba problem, and then you've got the information saying there have been, almost 300 bans, local bans of data centers. The ranking Democrat on energy and commerce is considering, for him, a moratorium on data centers. That supply angle is also getting interesting.
It's one of the biggest risks that I'm hearing, one of the biggest headwinds to these companies and to the entire data center build out, is that there is a very real pushback on the ground to not build these data centers. And that's one of the risks. And you also have, in terms of topics, some of the shift of executives to different companies. They're sort of losing this top talent. I was thinking of it almost as, you think about the NIL and the transfer portal, like that's happening right now in AI, where you see these AI executives moving every other minute. I mean, it's like we're watching either college, basketball, college sports, or at least the NFL in terms of the salaries are more akin to the NFL right now.